FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And guys, in this video, we're going to talk all about stop hunting. We're going to talk about what it is. We're going to see a couple of examples of what it looks like, and you know how to identify stop hunts. So without further ado, let's get this started. Alright, so when we talk about stop hunts, we essentially need to know what is a stop hunt and what are the main objectives of a stop hunt, right? So the stop hunt involves a deliberate movement outside of the range to what will become essentially the high or the low of the day. The move usually occurs in 3 pushes, which can be as simple as 3 candles, though you will sometimes see a small pause in the form of a pullback in the middle of this. And we're going to show you a couple of examples so you know exactly what to look for. Okay, but the main 2 objectives of stop hunt is basically to take out exiting stops, and then to encourage traders to commit to a position. Guys, without having traders committing to a position, they can't move in the direction that they want to move, because they have to accumulate contracts in order for them to make the bigger moves that they want to make. Okay, so for example, if we're looking at this this on euro pound right here, and let's say they want to move price from here, from the Asian range all the way down here. In order for them to do that, they need to have people that are willing to buy. All right, they need to have people that are willing to buy so that they can take the opposite trade of the order and sell. Now, for whatever amount of money that they need to move this down to, they need to have a specific number of traders that are buying so they can sell the opposite side of the trade. This is how they make this move from all the way up here all the way down here. So just keep that in mind, guys. When we talk about stop hunts, what does it look like? The way that it looks like is basically like this right here. Here's one push here. Here's a second push, right? It's basically what creates an M. Now, if you see the first push here, they had 1, 2, 3 candles, 4 candles. You see all these wicks right here? These are the extra pushes that they're trying to get all of the traders. The first leg of the M represents the first attempt of a stop hunt. If they don't get enough orders or enough people buying, they'll go ahead and make a second pass. Okay, and this second pass is when they basically get as many orders as they can, because they're going to try to do as much as possible to convince you to go ahead and to buy. They need you to take a position. So whatever it is that they need to do to convince you to take a position, whether long or short, they're going to do everything possible. The stop hunts, most of the time, you're going to see during a type 1 setup. You'll see them during type 2s and type 3s, but the most obvious ones are type 1s, because they have to move outside of the range for these moves to happen, like this one here. Okay, so the first swipe, they go up about 9 pips outside of the Asian range initial high of the day. And then the second swipe that they do, they go up 12 pips from the initial high of the Asian range that was set. So if they don't get enough people to buy here, they'll come back down and then they'll get it again. And this time they're basically convincing you that this is just doing what it normally does, right? What you read in all of the books, right? A, B, C, D, 1, 2, 3, whatever it is. They're just convincing you of this move that you see in all the books like this. That's all it is. Once they make this move, one thing that you have to understand is once they have enough orders, they're not coming back to that area. If they come back to that area, they basically release all of the traders that got suckered into buying to break even trades. So they're not coming back once they get what they need. Now, what you'll see is at the very top up here, okay, when they're coming down or when they're coming up for this stop hunt, at the very top here, if you ever have the buy and sell lines up here, so typically you'll see like 2 lines on your like MetaTrader that basically shows you the spread difference, right? You'll see that when they get up to this level here, the lines will begin to become further apart, and that's them basically widening the spread. So you'll see the spread, let's say, go from 5 to like 10, 11. So it'll go from this to this. And so why are they doing that? Well, it's pretty simple. The reason that they're doing that is because breakout traders would have orders. So you have a lot of breakout traders that have a bunch of orders sitting here, like a bunch of buy orders. And so what they'll do is they'll go ahead and widen the spread so they can get those orders. So literally you'll see this happen. They'll get all those orders, and all those orders are buy orders. Remember, guys, they can see all this shit. They can see all the orders that are there. So they'll grab the orders, and as soon as they have the orders, the spread goes back to normal, but price will make the drop that it needs to make. In a type 1 setup, okay, they can go up to 50 pips in one direction to convince you to go in that direction. So in this case here, they only went up, let's say 12 pips, 13 pips or so, right? But there will be cases sometimes, guys, that they will literally go 25 pips. Let's say they'll go 25 pips down. They'll go 25 pips down. If they don't have enough people selling, guess what? They'll go down another 25 pips because they have to convince you to go short. Because at the end of the day, they're trying to go long. Now, typically, when you see like 25, 50 pip stop hunts, you're typically at either a level 2 or definitely at a level 3, which is either peak formation high or low for the cycle. Especially peak formation high or low, because they're trying to basically reverse the market for the next cycle. So they need as many people going in one direction as possible so they can trap them. So that's all that they do with stop hunts. So here, in this example, this is still Euro Pound, right? You can see right here we have the Asian range. They went ahead and they moved up. And here's your stop hunt, guys. Basically, if you look at how this chart is right now, they go ahead and they kill off yesterday's, the previous day's high. How many traders, how many orders do you think are here that are buy orders? All in this area here from breakout traders, from traders that trade breakouts, right? If you have traders that trade breakout, well, guess what? All their orders are going to be just above the high. So you have orders all through here that are getting picked up. So they pick up all the orders that they need right there. And you can see a dead giveaway a lot of times, guys, are these wicks that you see. and the times that you see the wicks. Okay, so this happening at, let's say, 12 o'clock or something like that at midnight Eastern time really doesn't matter, right? So the timing of this happens, of course, after the Asian box is complete. So, of course, this is what, 3:45, 4 o'clock. So 3:45, 4 o'clock, you're already at the very beginning of the London session, right? So they need to convince you to go long so they can make the move to go short. But this is what they do, guys, right here. Here's another one. Same pair, previous day. Right here we're at the Asian session. They go ahead and they drop down. And where are they dropping down to, guys? Yesterday's low is right here. Dropping down close to yesterday's low. Convincing you to go short. So convincing you to go short, look at the wicks. Right at 3:30, 3:45, 4 o'clock. As soon as they have enough orders, boom, they're going all the way up. Here's another example. This one is not as extreme as it is, but you can still see the stop hunt here. Right out of the gate, they go up. They don't have enough orders that they need. No worries, they go down, come back up, retest. Notice how they don't take out the high that was created here. That's because, again, if they take out the high, they release the traders that went long. But as soon as they get enough people going long, they go the original direction that they wanted to go in. Here's another example here. This time, they don't need to convince as many traders to go short because they already have plenty of traders going short. So this is when you start to see those patterns that we talk about, the star pattern, the railroad tracks, the quarter wood, things of that nature. So whenever you see those patterns appear, they don't need to do much convincing for that day to get you to go short. Okay, so here we're still at 3 o'clock, 3:15. Again, opening of the London session right here is happening. They already have enough traders going in one direction. Why? Because the previous day's high. We're coming all the way from the previous day's high straight down. They already have traders convinced to go short. They have traders already convinced to go short from all the way up here. So they don't need to do much convincing. They already have what they need. As soon as they have what they need, guys, they just move away. Here's another example. Asian range. 2 pushes to create the high of the day. They stick around this level, stick around this level, stick around this level. As soon as they have enough, boom, they drop. This is all stop hunts right here, guys. So here's another example. They go up high, create the high of the day. They hold this position for literally basically the first half of the London session. Accumulating contracts. As soon as they have enough, they move away from it and they're not coming back. This is all they do. This is all a stop hunt is, guys. Okay? Is them making a false move? To convince you to go in one direction when they're really trying to go in the opposite direction. That's all they're trying to do. Here's one that they basically accumulate all throughout the London session to actually do the move for the US session, right? So London session here, and then here's your US session right at what, 9:30, 9:45, opening of the US session, and then they make their move back up. So in review, guys, what is a stop hunt? All a stop hunt is basically market makers trying to move price in one direction so they can convince you to take a trade in that same direction. It's a movement of price once they get past the Asian range that tries to convince you as a trader to take a position, to take the wrong position at that. Okay, that's all it is. It's them trying to convince you to take a position, guys. Okay, because they need you to take a position. Because without you taking a position in the market, they can't do anything. They need you to take a position in the market in order for them to move price how they want to move it. All right, that's literally all that it is, guys. All right, I hope you found this video useful, and I hope you get some value from it, guys. Thank you so much for watching the video. Appreciate your support. If you're new to the channel, please consider subscribing, and have a good rest of your week, guys.